Chakri Lokapriya as well joins in. Chakri, hi, morning. Just debating the market texture, and definitely seems like the worst is way behind us. But do you actively hunt for mid and small caps now? Do you now move away from large caps already?
Good morning. In terms of financials, I think we'll stick to the frontline names. And whereas the other sectors are concerned, wherever there is a good amount of earnings visibility, stocks have corrected quite a lot. And also, with the rupee appreciating, it reduces the raw material pressures, the input costs on these companies, and therefore their margins will improve, assuming that rupee doesn't fall back, oil doesn't go back up. And so against that backdrop, we look at those mid caps which will benefit from the reversed market conditions of an oil fall and a rupee appreciation.
And so, Chakri, where are you placing your bets in the market currently?
A couple of things have happened. One is with the oil fall and as well as the rupee appreciating, and also the bond yields improving. You're going to have PSU Banks which will likely to do well, and also RBI has eased norms for both PSU Banks as well as NBFCs. For PSU Banks, in terms of their capital requirements, they have one additional year, so it reduces their burden to raise capital Tier 1 in the coming months. And therefore companies like, of course, State Bank of India is still the leader, still very cheap, and also the credit costs for whether it's State Bank of India or if you look at a mid-cap like Union Bank, the credit costs are coming down quite significantly in the last few weeks. And therefore, given that they have low valuations, and also now you have lesser capital requirement, I think they'll be able to sustain a rebound in credit growth, which will probably be about, of course, for State Bank about 12%, 12-14%, and in the case of Union Bank it was hardly zero. I mean, it was close to zero last year. So any improvement from there is a welcome thing.
Right. That indeed is the case. We've spoken at length, Chakri, about how the race for Horlicks is heating up, and that there's continued interest with regards to the consumer market in India coming in at any price. So the visibility of growth is clearly expensive for investors, but they don't seem to care because at the end of the day, you're still looking at decent returns being delivered by at any price. So the visibility of growth is clearly expensive for investors, but they don't seem to care because at the end of the day, you're still looking at decent returns being delivered by the consumer stories or the consumer stock, so to speak. What would you take away from how the brand of Horlicks and its purchase would mean for the respective bidders, whether it's HUL or Nestle?
I think you will see deals like this continuing to happen because it is a marquee name, it is a growing market, because outside of the main towns you have lots of other markets, sub-markets which are being developed. So I think in these kind of things they are less likely to be valuation sensitive because it's more an entry into a new segment of the marketplace. And I think all you need is some amount of rupee stability because there is indeed a foreign component of financing these deals. And and I think these kind of deals, I think it's a good deal, and we'll see hopefully more of such the same.
Chakri, MCX, do you think all the bad news is in the price? The potential competition which has now come on the doorstep of MCX because the BSE and NSE, do you think, is it safe to ignore that?
I would continue to stay away from all exchanges. Look what happened to a National Stock Exchange, NSE. It was supposed to have gone public a couple of years ago, and various issues, one after the other, have delayed its IPOs. And also, mind you, whether it's BSE, NSE, or even MCX, these are all very politically sensitive companies in terms of what is the price that they charge, what are the services they can offer, and if so, at what rate. And I think you're moving to an environment where these will be traded like utilities going forward. There will be a multiple de-rating is what I fear. And so because of greater regulatory oversight on all exchanges. So from that perspective, they become a commodity provider. Whether you trade on one exchange or the other, what difference does it make if your only differentiation is the price of the trade that you're paying on one exchange versus the other? So against that backdrop, if you fast forward sufficiently into, not too forward, maybe next 3-4 years, I see the margins coming down even further. Yes, volumes may go up, but for a volume play, I would rather stay away. There are lots of other fish in the pond.
All right.
Chakri, what is your view on how telecom should be reported? Some positive commentary coming in from both Bharti and Idea at the analyst day meeting. In fact, Bharti categorically mentioning that ARPUs are bottoming out. Just yesterday, the Economic Times was reporting that maybe they're going in and preparing in a war chest, looking at a sizable fundraising to the tune of about 15,000 crore rupees. But do you think the time is right to buy into telecom stocks just yet? Or would you also believe that wait it out, you're going to get better opportunities in the next 6 months perhaps?
I would agree with Sandeep that I would stay away from telecom, not just for the next 6 months, but stay away from telecom. It's just a volume game, low margin game, and also increasingly a huge amount of debt to service. Vodafone Idea, even after the proposed fundraise, they'll still be trading at close to bankruptcy levels. That's not a good place to be. And Bharti is not much better. So against that, yes, ARPU is bottomed out, etc. Maybe there's some relief in terms of their margins, but still way off for an investment case. And so I would continue to stay away from the entire telecom space of Bharti and Vodafone.
Okay.